All right, folks, welcome to a weekly market recap. This week, I did not take any trades, neither did I do last week. The reasoning is because market is in an expansion phase, so trying to catch a trade on the expansion phase are going to be very hard unless you're going down to the lower time frame. If you're looking for a 4 hour level to, you know, help you catch a trade, but once the reversal happens, where the market is in a retracement profile, if you're looking for that 4 hour level, 1 hour level, you're going to get smacked very, very hard, right? That's why we don't do it. And as you guys know, any lower time frame than daily is low probability. Any level than daily time frame and above is low probability levels. And any time frame that's any time frame if there's expansion that happens from a 4 hour or an hourly time frame is usually produced from a daily and above time frame levels. So that's why I love daily time frame. It's my gold, right? It's literally a gold mine, to be honest. Daily time frame or fucking gold mine, right? Now, as I said before, the reason why I didn't take any trades this past 2 week, market is an expansion profile, so catching a trade is going to be relatively difficult, right? It's kind of difficult to catch any trades. In fact, now on this week, I want to like this the expansion profile started from this specific week. Last week, you could have cashed it, but it would have been difficult to catch that also because to me personally, during that time there was no setup. We go down to lower time frame. Market just hit our target without giving us any setups here. Right? No total sweep confirmation, no model one tap, and it was just expansion to the upside. So that's the reason, right? Now, if you could have couched if you could have catched this move from a 4 hour level, but we're looking for very high probabilities, which is only from daily levels and above. Now, this is the weekly market recap. We could go very smooth. And our main player for this week is not the euro. We have to pay attention to the dollar, right? Because the euro is kind of hard to tell where the market might go because there's so many bullish candles. So there's no sell side liquidity or buy side liquidity to tell, right? There is, there's definitely there. But the one we care about is these ones, right? These specific highs and lows, right? Because on DXY, we made a daily range on Wednesday. And look at this. What did I tell you guys on Wednesday? That a candle can close in a hammer candle. And usually Wednesday, once it does make the high or low of the week, it will make, when it makes a hammer candle, the hammer candle will go purge out the high or low. I say it will go purge out the you'll make a new high of the week, which Friday or Thursday does, but it's always usually gonna be Friday because Friday's gonna be expansion also, because Wednesday is gonna be the manipulation, Thursday expansion, Friday expansion, right? Same thing to classic expansions. Monday, a high of the week, Tuesday expansion, Wednesday expansion, Thursday a little expansion, but trying to cap off the week ring. But you can see there's always two expansion weeks, expansion days, right? For a classical expansion profile, profile two, Tuesday low of the week or half the week, Wednesday expansion, Thursday expansion, Friday, cap it off, right? It's always going to be two. So 1, 2, it tells you, right? Now, DXY was a big player because without DXY, if I were to take a short here and took a short here, I would have been fucking wrecked, right? Because DXY is a big man player, right? You guys already know this. I've said it so many times already that DXY is the most important pair when trading forex, right? Because you do not want to trade anything other than a US dollar based type of currency, right? Because they're gonna move the most. They're gonna be the most volatile, right? I mean, you could trade something else other than the dollar, right? You could trade fucking GPGPY, You could do that, but what are we looking for? We're looking to make money. We're looking to fucking actually be profitable long term. Because those pairs, they're they are secondary pairs, so they're not going to move very clear. There can be a lot of shitty price action. Like if you go GBP, JPY, right? I'm not sure. I don't even check GBP, JPY, but it's pretty shitty, right? It's pretty shitty. Like, clean move out of nowhere. But overall, do you want to trade in this shit? I don't think so. You do. I don't think you do want to. I don't know if you guys want to trade in this, right? There's not a clear movement there. That's what I call the secondary pair. They call something else. There's a word for it. I literally forgot it. But you know, the lesson is there. Always try to trade something that is correlated with the dollar, like USD CAD, right? It's pretty smooth, other than other pairs, because this is not a secondary pair. It's a regulatory. I don't even know. It's the first pair, right? It's a mandatory pair, not a, secondary. Now, if we go back to GBP, DXY, you can see why we can see the importance, right? And especially when they were like, why do I see you only trade one pair? Because I'm only good at this pair. I only like this. I only like to trade this pair. Any other pair, I literally invest on it, right? So if you see me in crypto, I don't trade crypto on a 15-minute time frame. I may trade it on an hourly or 4-hour to execute my setups, but I am most of the time, when I take a like a crypto trade, my crypto trade is gonna last for a solid month, 2 month, 3 month, 4 month time, right? It's not gonna take 4 hours, 6 hours, 2 days, 3 days, 4 days. It's gonna take at least sometimes it may take a year. There's one crypto trade I had. I hold it from the that last what was it called, the last alt season, right? And I hold it for a very long time. Yes, that did fuck up my profits because market eventually went down, and I thought it was gonna keep on going up higher, and it didn't even lose some profits. But at the end of the day, I hold my trades very long, right? I'm trying to, because I had a mistake over there where I got in a little too, not that it didn't get too late, but I tried to hold a trade. I thought I was gonna keep on going up higher because I thought I got the right time, but the time of it already started way before me getting into the trade. So holding that very long didn't make sense. So yeah, now enough of that. You guys tell you guys why, right? That's why I only trade one pair. I'm very good I'm very good trading at dollar and EUR/USD. Anything else, I could definitely trade it, but I just don't want to trade it because I want to have one focus. Because one trade here, man, chat, listen, 5% risks on one trade, I make a lot of money, right? 5% risks with a 20 RR is for 100% gain. 5% risks with a 10 RR is a 50% gain, right? I'm making a lot of money, right? So one trade does it. Even if I'm risking 1%, if you're risking 2%, right? It does it, right? It does a job. And especially in a profit space, one trade, two trade does it, right? Does a lot of job. Now that should be the goal. Every time I get my profits from, I haven't taken a trade in 2 weeks, so I haven't made any money yet because I gotta wait until I get a setup. But when I do get my profits, when I make money, when I get a payout, I usually take 70 to 75%, or sometimes 80% of my profits and put in my personal account, because a personal account, I use it for Roth IRA and a traditional IRA. So I wait to avoid taxes. I wait to build up for my older age. But I may stop doing that because the account needs a little up. But the topic's not there, right? Because in the USA, you could have a traditional IRA and a Roth IRA account, right, for trading. You can build it up as much as you can. I think the Roth IRA has a cap on it, which is 153,000. But you can use traditional IRA to make that uncapped, to make it uncapped, right? So yeah, now let's get straight into it here, because all the profits usually will be deductible. Not deductible. There will be probably free, tax free, without getting taxed on, right? So yeah, and that's that right there. I mean, you have to wait till you're 59 and a half years old which that's a problem. I'm like, shit, before that, I'll be a fucking billionaire. I don't need that. I don't even need this, right? But I saw some rich ass people, right? This guy made 5 billion, bro, from the IRA, right? I think it was, I'm pretty sure the Roth, because he did some sort of a strategy to change from the Roth, from the traditional to the Roth, so it doesn't get taxed, right? So he has 5 billion liquid, and the way he made his money was literally from trading, right? He was a famous trader. I don't know, I forgot his name, but he's not like a trader, right? More of a, like, fucking Warren Buffett. What he does? Fucking just buys a coin, buys it, right? Just compound interest. Now, as we turn into the week, this week, Monday opened up, just rallied down. I thought it was going to go up higher. So put the Friday high at least. Okay, I was like, okay, Monday didn't close in a big expansion candle. It kind of ranged, didn't do a big expansion. So I was like, okay, that could be a range. But I noticed that since he ranged, next candle is going to explode because trend, range, trend, right? So this candle trended. I was like, okay, perfect. Now this one met my target. This one at this time at Tuesday, it was SMT, but I was like, this SMT is no way it's going to hold. It's not going to hold. Why it's not going to hold? The reason why it's not going to hold is simple. Because time is not right. And I already talked about this on Wednesday, why I told you guys that SMT wasn't going to hold. When you want an SMT to work out, and when there's an SMT, the only time it's going to actually hold is when the time is right. When the time is not right, it's just going to be there for a day or so, and eventually he's going to constantly get broken until the target is met, because the targets become inevitable, right? Keep in mind, the COT targets become inevitable. Once you're in the right side of the market, you become inevitable, right? And when the SMT is there, sometimes the medium become inevitable. But when the SMT is there, what's going to happen is, if the SMT is the right time, then you get out, because the SMT is the right time, right? It's gonna hold, because SMT isn't the right motherfucking time. When it's not the right time, you could expect to go lower and lower until the right time is there, right? Now, the right time, before the right time, that's already got met. So we're not looking for that anymore. So that's what happened Wednesday. I was like, okay, this is going to be some sort of reversal. There's going to be a midweek reversal. Wednesday low of the week is going to be a hammer candle. I know, because I told you guys, like Wednesday, I knew Wednesday wasn't going to make. I knew Wednesday is not going to get soup again, because it was a clear soup, right? Clear classical candle soup, right? I was like, Wednesday is not going to get souped, right? So since it's not going to get souped, what we're going to do is very simple. Looking for a hammer candle, and we're looking to wait until a specific price point in order for us to trade, because if it's going to be a hammer candle, it's going to make a new high of the week. So it needs to go up all the way up higher above the Monday high. So, and close from there on forward, right? So once that happens, okay, there's also a daily range here. Super high, super low, stable high, and a stable low, premium discount. And this, during the duration and the creation of the daily range, we made a important key level. How do we make an important key level? This right over here. How does that important key level once again? Because high broke down this low, this low, this low. But primarily, we only care about this high, just broke a low, which makes it important key level. That means a lot of resting liquidity is around here, which needs to be taken out and filled, right? I don't know. It could be, taken out. I don't know if it's going to be filled or taken out, right? But it's highly likely to be taken out. Now, that's what we're expecting. So I was like, okay, I'm not going to take a trade until next week. Tuesday should be the one, because if Monday go taps it, it's gonna needs to close, because when the key level gets tapped, it usually slows down, right? It usually stops for a minute, then goes up, right? You can see this is important key level, a low that broke a high, and when he got tapped, Wednesday just waited, because he was the one to tap the key level. So now, as you guys know, we're looking for speed, got a key level, right? Then we're looking for range, kind of range. After he tapped it, he ranged. Basically, he arranged, right? We're looking for speed away from the key level, right? Boom. Same thing that happens in a higher time frame. Same thing will happen to the lower time frame. Lower time frame, it happens much more often because more candles print. You can see the same topic, although there's not a lot of range, but during a specific day, it fucking ranged, right? We're looking for the same thing here. We're looking for money to tap it, not do much. Just wait. Eventually, Tuesday super out the Monday high, and go down lower. I have SMT. I'm not sure. Right? I'm not going to be like, yeah, that's what's gonna happen, right? If that's what's gonna happen, it may not happen, right? It may just go up higher or lower. It may take out this high, but that is the prediction I have, which will high likely happen. But let's be on a non-expectation. Right? We're gonna anticipate, but we're not gonna expect it to constantly. We're not gonna expect it to always work out in our favor, because we could be wrong, and because we don't want overconfidence. Right? Overconfidence is not good. But before going any further, make sure you guys like, comment, subscribe, share. Join the Telegram link in the description down below. But that's what I'm looking for on DXY. Now that I'm gonna explain more on it tomorrow, because tomorrow's the video we were supposed to make on some updates on the dollar and the EU, which we will. But that's what I was looking for the week. I was like, okay, I'm not gonna take any trade because it's not gonna offer me any. I'm just gonna wait until the next week. So we're waiting. Now that's what happened. Now also, on Wednesday, I told the Telegram, I told people in the Telegram that I will be trading Wednesday, because Tuesdays or Wednesdays are highest probability of the week, the most volatile days out of the week. Beautiful, right? And now if you go back, what was some other examples I had? Some Wednesday. Boom, right over here again, right? Wednesday, beautiful day, right? You just want to cause a reversal. It's pretty weird to just look at it on DXY because of polar opposite. Wednesday, right? Wednesday again, right? But if you look into DXY, it's a little bit more difficult for me to tell, because I'm like, the candles are kind of weirder, right? They're not aligned. But this one they're very aligned here, right? Which makes me predict the market even easier. But that's the reason why I am looking for trading on Wednesday. You can see pretty clear Wednesday candle, pretty clear Wednesday candle, right? Also, what else? Where was the other one? Pretty clear Wednesday candle, right? Now, that's why I told you guys to trade it. That's why I told you guys I'm going to trade it. And it's the most liquid. It's the most liquid time of the week. Also with week 2, week 3, and quarter 2 and quarter 3. And London and New York, right? There's 4 sessions out of the day there's 4 sessions out of the day. Asia, London, New York, and a PM session, right? But guess what? The most liquid is the middle 2. The most liquid out of the here are quarter 2 and quarter 3. The most liquid time out of the month is week 2 and week 3. It's the same thing when you gamble. When you gamble, week 2 and week 3 are the highest probability, right? Because when I used to gamble, may Allah forgive me for doing this, right? But all the profits went nowhere, right? You literally lost all of them, right? I didn't lose all of them like in the gambling, but where'd the money go? I don't know. I spent that shit like in less than a day. I bought a lot of shit, right? I bought PS5, a computer, this, that, and the computer broke. It was a $2,000 computer, right? I was like, I had a computer, laptop. I thought I was like, it's gonna be the best computer in the world. Shit, fucking broke, and it broke when I put water on there, right? So literally, the computer stopped working. But the profit went away, alhamdulillah, right? Because the money was overall haram, right? But the same concept. This one is just halal, right? That's haram. The same concept is there also. Week 2 and week 3 are the highest, busiest time on the casino. So a lot of people come in, and usually the casinos like to let people win on those weeks. So on week 4, they come and spend it all. Week 4 has less chance of winning, because on week 2 and week 3, there's gonna be a little bit more winners, right? So there's gonna be a chance to win there's gonna be chances for you to win easier, right? Than week 4. Week 4 is not that lucrative, so they make the machine to not give out as many winners as they can, right? So they give out less winners, right? It's the same concept, right? Same concept. Now, that's this is the lesson of the week. The lesson of the week is very simple and easy. Is to constantly seek improvement. Is that I can trade Wednesday, and I will trade Wednesday from now forward. And the next lesson is to pay attention to the lower time frame on the 15-minute or the 5-minute, whether depending on what time frame I'm executing. The reasoning is because I need to know the lower time frame pattern at the higher time frame key level. Higher time frame key level is the CRT, right? But I need to know it. Need to know what happens so I can capitalize on the trade even more. So I can have a tighter stop loss, tighter invalidation, and tie it easier. And to know, okay, this right over here will make the low and will not get retested. I can just enter up this, etc., which will not take me, a day to know. I already know the concept of it. It's going to be simple, right? Expansion to the key level, tap the key level, right? Speed to the key level, range, aggressiveness away from the key level, right? That's a general rule of thumb, right? In this case, he did a little bit different, right? Because he tapped before we tapped the key level, he tapped the key level and then reverse, right? On the same candle. And with that, in this case, this one right over here, it could happen. But on the daily range, it's quite the opposite, right? Because in this case, there's a daily range over here, right? There's a daily range. If you go to the other pair, daily range, right? Super low, super high, stable low, premium discount, right? Once we made this high right over here, right? Boom, right? When we made this high, right? I went to the wrong high. This high right over here this is a point of key level high that broke a low. It's tested, and when it gets tested, you can see it ranges first, then it reverses. Now that was during the daily range. In this case, there was no daily range on this candle, right? So, will it do the same thing? No. You could just tap it, key level, and the same candle and reverse. In this case, when there's a daily range, when it taps the key level, it ranges, then it does that specific, rhythm or specific pattern. Now, that's the overall lesson. That's the most important lesson, right? To know the lower time frame. But as I said to you guys, I already know what happens in the lower time frame, but I just need to pay attention a little bit more on the invalidations, right? To know, okay, this specific area will not get tested, so I can put a tighter stop loss, making me more money, right? Now, that's the lesson. Beautiful week. Thanks for watching. Wish you guys like, subscribe, share. And one last thing I learned on this week is the order block above an old high or below an old low. Total soups. Beautiful. To the pip, to the tick. There's gonna be a video about it in the next couple of minutes. Make sure you guys watch that also. And beautiful concept. Now, sometimes I see it getting paired with the fair value gap also, but when there's a fair value gap with it, what we're gonna do is very simple. Enter in the order block, right? Because when there's a fair value gap and the order block paired together, so there's a fair value gap above the old high or old low, and there's also a order block above the old high or old low. You usually tap the order block, then reverse. So if you enter the fair value gap, you're still not gonna get stopped out, but it's gonna be a less RR. But when you wait for the order block to get tapped, you make more RR. It is safer, and also you could use it for fair value gap stop loss sometimes if the candle is very thick, very bulky, right? So yeah, thanks for watching. Make sure you guys like, comment, share. Quick little insights to what's going to be happening. Which those, oh my goodness, those are such a high probability concepts, but yeah, at the correct time. Now, thanks for watching. Make sure you like, comment, share. Join the Telegram, link in the description down below, and I'll see you guys at Telegram. Peace out.